What's up, everybody? Friday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Folkers, and I hope everybody had a phenomenal trading day yesterday. As yesterday, we had our live trade room. It was one of those days where we saw the market take a big rally up. We saw gold do its thing for lack of better terms, being not a whole lot. And we saw crude oil give us 2 hours of the market just going bat crap crazy. And then we'll see what happens. So a lot to talk about on today's session. If you're new to the channel, do me a favor, make sure you subscribe. Hit that thumbs up icon down below to tell us that you like it. If you're a regular visitor, leave a comment. The comments are big. They tell the computer that people are actually watching. Here's a good one for a comment today. Question of the day? What is your weekend plan after a week of trading? How do you unwind after a week of trading? I will tell you this weekend it's going to be we're doing some work around the house. You can tell I'm not in my normal studio. We're actually rebuilding out the Traders Army Command Center in our household, so it's going to be cool when that thing launches. But that's my weekend, is getting ready for that. All right, let's go ahead and dive in like we do each and every day. So looking at the ES. So the ES this morning, we are down about 5 points. Now, yesterday we had a supply level here that we anticipated a potential reversal if we saw some weakness, and price did come into that level. But here's our first candle: 1, 2, 3, 4, 5, 6 candles later, the market had went nowhere. Now 7, 8, 9 candles later, nowhere. So essentially, this trade told us, hey, listen, you should probably get out of this position because the market's not doing so hot. It's not giving you what you want it to do. And so it gave us the choice to exit. Now, we did also have this level up here as a potential for where we had our prior reversal. Price has moved down from that level. Now we're looking at that all-time high there of 33.98, and that breakout does still exist, right? We still care about that as a potential breakout above that all-time high. But now we're looking at where can we get a decent reversal move. Well, looking at the 4-hour, we had spoken to the fact that our momentum was greatly shifting, and we were seeing a lot of weakening in the momentum of our markets. If I throw my momentum indicator on here, my MACD, we spoke about this last week. It was prices were still rising, but the momentum was greatly falling. Matter of fact, the market momentum had been falling for a while as we saw this move up here. And we were seeing a slowing of momentum as well down in here. So we see that our momentum has slowed in these markets. And with that slowing of momentum, there's oftentimes going to be a rollover. Now, not always. Sometimes we're just basing in front of a potential breakout area. Matter of fact, on a daily chart, you can see that we are, this looks an awful, eerily similar picture to this area over here. I don't know if anybody else notices that or not, but as far as narrowing of a range, going very sideways, and now I'm not saying that, by the way, we're going to get a 30% drop in the markets. I am saying, however, that we can clearly see the slowing of momentum and the tightening of our range. So just be aware of that. I wouldn't be overly surprised to see prices give us a bit deeper of a pullback. Now, I will say I'm okay with a bit of a pullback, and in my mind, I think a clean pullback would be a pullback back into this 32.75 region. And the reason for that is, number one, it puts us below the 20-period moving average, above the 50-period moving average, which is usually a very common reversal point for swing trading styles. Number two, which I think is even more valuable, is that it's in an old area of resistance. Old resistance oftentimes acts as new levels of support, and it was a turning point back here at this area of support back in the day, back in the end of January. So my point behind all that is that price has memory, and oftentimes we'll trade back into those levels. So if we pull back into here, I wouldn't be overly surprised or shocked. Now that's a little bit bigger picture time frame, and I know normally we talk day trading in this session. And so looking at our smallest time frame charts, let me get rid of all these studies. Looking at our smaller time frame charts, we would see that from an hourly perspective, we have a little bit of supply up above us that's not too terrible. Matter of fact, it's actually a fairly clean area of supply up above us. On the 15-minute, looking at demand, I will say there's a nice little area of demand right in here. It's a very clean wick over wick zone. So for those of you that use those wick over wick zones, here's a very clean one. Now, but let's talk a little bit about where your stop goes in this instance. For those of you that listen to me regularly, you know that my stop is always going to go, if we're at a wick over wick above a pivot high, it's going to be above a pivot low, it's going to be outside of that pivot. So technically your stop should be down here. Now, one of the things that we say is that, well, that stop is pretty far away from current price, so am I willing to put my stop here? Why don't I just put it down below this zone here? Well, you can also put it below the wick of the leg in candlestick. Well, in this case, the leg in candlestick is the same as the pivot, and so you might have different opportunities in there. So let me explain what I mean by that. So sometimes you're going to see that price will be, you'll have price look something like this, and you'll have a pivot, and then you'll have a little bit of basing, and then you'll have a move up. Now, deeper inside of that picture, let's call it right in here, if I were just to draw the candlesticks, you might have a candlestick, and let's give me some red and green ones. You might have candlesticks that look something like this. A move down. Now bear with me, by the way, I'm drawing with a mouse. A move down, and then some sort of a pivot, and then price comes back up, and we get a picture that looks like that, right? Where we have a picture that looks like this. Now, in this case, where can I place my stop? Well, my stop, if I were to draw the zone, right, in this case, let me make it so I can make it as straight as possible, although it's on crayon-looking drawings. In this case, if I were to draw the zone would be right here, right? Here's my wick over wick. So where does my stop go? Well, in this case, my stop would go at one of two places. Number one is below the pivot. That's actually the best place to place your stop. However, for some people, that's too much risk. Well, the other place that I can do it is outside the bottom of the leg-in candle. Well, this is my leg-in candlestick right here. So I can place it below the leg-in candlestick, which is right here. Now, that is a very common way to identify where to place the stop, and instead of just putting it a little bit below the zone, because the zone, for lack of better terms, could be considered somewhat arbitrary if you don't have the wicks and bodies of candles as part of the inclusion. So in this case, we're placing our stop below the wick of the leg in. Well, if this is on a 60-minute chart, if even this is too wide for you, right? If placing your stop below here is too wide for you, then you can go to, let's say if this is a 60, you could theoretically then go down to the 15-minute chart and do the same exercise. Place your stop below the wick. Well, in this instance, what we're looking at right here, we're already looking at a 15-minute chart. We already have a 15-minute chart. And so since we already have a 15-minute chart, let me just highlight that right there. Since we already have a 15-minute chart, our stop has to go below here to follow the rules that we put in place. All right, so hopefully that makes sense to everybody. If you guys don't notice that, there's a video on Traders Army on the website about how to place stops and why we place our stops where we do. And so that's one to take a look at for today. I know, once again, now if that's too wide from here to here, that winds up being about 13 points. Take a micro. You take the micro contracts if that's too wide. Or wait for price to start coming back up and then place your stop underneath an area of demand. Either way, that would be a decent little level. Now, as far as if these levels fail, if we start to see these levels fail and we start to see that the market pushes through those, well, if we start to push through, especially through these three where we have those higher lows, if we do push through those, that's what's going to give me my signal, hey, I need to be cautious of a bigger rollover, which gives me a better opportunity to potentially get long somewhere down in here. All right, I know that's a long time on one market, but I want to at least do that as a bit of a lesson. So moving over to the NASDAQ, let's talk NASDAQ. So yesterday in our NASDAQ on the hourly chart, we had a little bit of a breakout opportunity above the all-time high, which we did get a nice little run up there and got a good little trade above that zone. Now the basing was a little bit, may have been a little bit farther away than what we normally like to see, so you may or may not have gotten in because the basing was a little bit further out If I look at it on a 15-minute chart, though, it now gives me a potential for a re-entry somewhere down in here on a bit of a pullback, although this wick over wick level exists here. Now, we did have this little level on a 60-minute chart. So we were using this level here on a 60. So this is a wick over wick long that we had set up yesterday from our position. I'm sorry, no, it was on the 15. Excuse me. I just have it drawn in green still. We had this very, very small wick over wick area, and it's super tiny. Let me zoom into this real quick. And this goes back to the lesson that we just talked about. We had a very small wick over wick level to the point that it was like 4 S&P points, the NASDAQ points, the zone itself. But the bottom of the leg in was down here. And so your stop realistically should go down below this region in here based upon your risk tolerance. And if you held on, you got a very strong move out of the level of over 230 points came out of that move. And so it was a very, very strong move away. And if you didn't catch that, you had an opportunity there for the breakout. So you had a couple of different opportunities to get in on this NASDAQ long yesterday. Although, once again, the breakout, the basing on the hourly chart was not quite as close as what I normally like it to be. And so now, looking at today, what might we find? Well, I've got a little level here at the breakout point from yesterday where we had that little bit of basing. So there is that opportunity there for the breakout point where we had that little bit of basing where we could see a bit of a reversal. It's not the cleanest level, but it's certainly not terrible. The biggest problem is that it's right in the middle of this move, and so it's not the cleanest. I normally would look to this wick over wick area here if it wasn't for the fact that this green candle's lower wick touched it, rallied up, based, and moved away. So neither one of those are really super clean when it comes to levels. When I slide down to a 15-minute chart, you could see a little bit of a reversal off of this level in here, and that would be inside of the hourly chart with a little bit lower risk because it's a smaller zone. But I don't really see any super phenomenal areas of demand. As always, I mean, when you have an all-time high, you have a standing breakout above the all-time high, provided that there's basing in front of the level. That's a standing, that's kind of a standing trade we've had for a while there, and every time it's done it, it's run for a little bit. So, I'd rather take the probability that it will hold over time. Next, look into the Russell. So in the rut, we have a breakdown point here that we've hit, and we came back yesterday and touched it and moved away. The fact that we touched it and moved away actually makes this a stronger breakdown. So when I'm looking for a potential breakdown trade, this is actually my best market. Now, I'd want to see basing somewhere around this area in order for this to make sense. Now, as far as a long goes, I don't have any clean longs until the hourly level down here at 15.16. So if we break out, your first target might be there around 15.40, take about 8 to 10 points out of the move, and then your second target goes all the way down here to 15.16. All right, moving to commodities. So on our commodities markets, crude oil yesterday was just utterly frustrating, and it was. We were in the live trade room looking at this move down. We had this really big move down, one candlestick move down, and we thought, okay, well, let's look to see what happens when price returns back up to this level. And quite literally, I mean, we got, and I say it's a green candle. At one point, this was a big red candle, right? So when this was a big red candle, we said, hey, you might get a little opportunity right here when price returns. And right there in the class, the market just laughed at us and blew right through it. And so at that point, I said, well, our demand level down here still looks pretty clean. I don't think we're going to make it down to that demand level. Well, lo and behold, on an hourly chart, we made it back to that demand level on the very next candlestick. And then the very next candlestick rallied it right back up to where it started. When I see this, when I see two candlesticks that are expanded range candles, roughly of the same size, to me, that's just somebody wiping out traders. That's just, call me a conspiracy theorist, but I think that's somebody out there wiping out traders because they know, hey, lots of traders are going to place their positions down here, so we're going to get them out. And that's essentially what happened. And so we got swept up in that one yesterday, unfortunately, and that is the way the proverbial cookie crumbles, because it's what happens when you're not the biggest fish in the pond. I'm okay with that. I'll give up a few fish out of the school in order to keep the school alive. And so I would say that up here there's a decent little potential for a 15-minute reversal level if price comes back to that zone. All right, gold. So gold did nothing in that sideways area, but we're above a potential breakdown point. Now, you could, if you want to be a bit more aggressive on your breakdown, you could actually look at a breakdown right around now. But I think that you're better off still looking below this 1922 area for today. Other than that, supply level still exists up in this region. Next, bonds and currency markets. And in our bonds and currency markets, starting with the ZN, nothing really to add. We've got a level of supply up above us at this move down, and our breakdown here at 139.075 on our 4-hour. Zoom out the right way. On our 4-hour, we actually do have a bit of an upward trend. We just don't have anything super clean as far as an entry to get in on that 4-hour. Just didn't mean to use a 30-minute. On the 1-hour chart, there's really nothing clean for a long entry, giving us a chance to get back in. So next, the Aussie. So in our Aussie position, we had a little bit of a supply level up here yesterday. Price did not come back into that zone. We came close and didn't get filled, which means this now has to switch to a confirmation entry. So that switches to a confirmation entry. Better little potential better level. It could be actually up here right below that pivot. Although if we make it back up to there, then our upward trend will be much more cleanly reestablished. We'll have a much more cleanly reestablished level back up in there for an upward trend. Oops, let's go to the 4-hour. Because we will have gotten above this swing high. So it will be a little bit less probable on that the price would actually turn at that zone. But let's switch that to a confirmation. I think that's still okay. Looking at the euro, our euro level, this son of a gun just barely missed us. So we continue that as a confirmation entry. We did get a nice little limit entry off of here with a move away. So this confirmation entry is still here, still valid. I'm going to remove that one for now because I don't like it as much as I like this wick over wick right here, and this is the areas that hit in the overnight. We do have a little demand level down here, so be aware that if we get basing in front of that level, it's going to be called off. Remember, basing in front of the level becomes the kiss of death. Great. The Canadian dollar as well. We're seeing a little bit of weakness here on somewhat of a rollover, and it's frankly putting in. This is definitely now this. A lot of people don't see this as a momentum shift, but this is actually a fairly big momentum shift, and technically this is a really good head and shoulders pattern that this is forming. And if I put my momentum indicator on here, you'll be able to see the momentum shift very clearly, right? We got swing high, swing high, swing high, swing high. I've got lower swing highs in my momentum, higher swing highs in price, and that led to a lower swing high right here. So when I'm looking at the true picture of a head and shoulders pattern, what I would be looking at is shoulder, head, shoulder. And that's typically what you want to see is a slightly rising neckline, right? So we are putting in a bit of a traditional head and shoulders pattern in the Canadian dollar, which is usually a sign for a bit of weakness. Now, how much weakness is it? It's typically a measured move from the top of the head to the neckline, which would put us right at about here. So let me go ahead and let's close this out, and let's draw the actual lines themselves on the charts. Now, I'm not saying that that's definitely going to come to fruition, but I want to be aware of it, you know, as we kind of draw this out. So here's our neckline. If that happens, if we get the breakdown, it would be top of the head to the neck as a measured move. We just take that line and bring it down here, and that puts us, if we break in somewhere in this region, that puts us right here at this area of demand. Now, what does that do for my levels? Well, my levels, what it does for my zones is it makes me say, well, I'm a little less cautious. I'm a little bit more cautious about this level here. So I'm going to be a little bit more, you know, cautious about this demand area and I'm going to switch it to a confirmation. Doesn't mean that I'm out of it, but it definitely changes my mindset. And the reason it changes my mindset, by the way, is because on a 4-hour, this becomes a lower swing high, right? The swing high here on the right is lower than this swing high here on the left. And so that's a lower high. Now, I still have higher lows because that's my last swing low, and this is the swing low prior to that. But if we get below this low, now I'll have a lower high and a lower low, which means my demand areas have to be confirmation levels anyway. So then I would start to say, well, I'm not taking necessarily the breakout of the head and shoulders neckline. We don't trade the breakout of a traditional price pattern. What I would be more apt to do is to look and see, okay, if we get price dropping into that region, is this going to turn into an area of supply? Right? And that's where I would look for a potential for a reversal. If price continues to come down from here, this becomes a supply level for then price to drop. All right, Great British Pound. Yesterday in our pound level, we had a zone right in here. Price came into the zone. 1, 2, 3 candles later, we knew that it was getting pretty rough. And we actually put out an update in our trade feed. And one of the updates that we put out in our trade feed was around the fact that we saw that it was getting weak, and then it might actually be setting up, for those of you that trade on a smaller time frame, for a breakout. Now, that breakout potential showed up much more cleanly on a 15-minute chart right in here, but you can see that we had a touch with basing, and so our update yesterday, and by the way, every day we have our live trade room updates. It says our 60-minute supply is 4 candles into not moving our direction. If you took the short, follow the 6-candle rule, our stop should be above 1322. If you did not take the short, actually setting up for an excellent breakout to the upside on a 15-minute chart. So, sometimes you can get into a trade and realize, hey, listen, this is setting up for a completely different trade. And that's what happened. It's set up for a completely different trade and did actually give you a breakout if you wanted to jump in there and take that. Now, unfortunately, the 1-hour chart was definitely, was clearly a stop out. But you had the opportunity to look at it and say, hey, is my bias wrong by going to that smaller time frame? Right? By going to that smaller time frame and taking a look at it. So, next level that I would be looking at on here, so going to the 4-hour chart, is that we put in a little bit of a double topping pattern here, as we're seeing definitely, we had to move up, but it's now rolled over. In the overnight, we see a lot of these currencies have rolled over. There's not a whole lot that I want to add to this one for this morning. I will take a look at this area up in here in case price gives us a bit of a rally to see if this area becomes a reversal later today. Remembering that it is a Friday, and really for me, Friday after about 11 a.m. Eastern time, it doesn't make sense to do a whole heck of a lot of trading. All right, last, Japanese yen. So the Japanese yen actually came into our supply level and got a pretty good sell-off in the overnight. So those of you that are up and you're trading that supply level, you got a really nice move away. We didn't get any basing into the level. It was just a very clean touch and a nice move away. So if you are in that trade, take your stop, move it down to here, 94578, so that you're above that little wick over wick area right in there. At this point, I'm going to leave that level there. I'm just going to switch it to a confirmation because it's not dead. We didn't trade halfway into it, so it's still a supply level, still valid. As far as demand goes, I'm not going to want to really add too much demand. I got an area right in here. This little level here is somewhat intriguing, as oftentimes these levels there, just above that little bit of basing is usually sometimes a pretty clean area. So keep an eye on this one today. I don't know if we're going to get a reversal here, and I'm not going to drop my lines on it, but I am going to throw an alert there to see what does it look like when we get there. I'm a huge fan of alerts, and if we come into that the right way, then I'll look at that as an opportunity. So I know we went a little bit longer today than usual. Hopefully, you guys got a lot of value out of today's session. If you guys have any questions, as always, send us an email, support@tradersarmy.com. Until Monday, everybody, have a great day. See ya.